I'm here to talk about Assembly Bill 260, the main mortgage reform bill that the legislature passed, and we urge the governor to sign it. It has been multiple years since the mortgage crisis, and very, very little in terms of lending reform has actually happened in California and in the United States. President Obama recently criticized Wall Street and the Congress for moving very slowly on lending reforms. AB 260 is a bill where California can lead the way. It takes some of the worst practices in the subprime mortgage industry and it bans them. One of them is called steering, where you would go to a mortgage broker or a lender acting as a broker, and they will put you into a higher interest rate, riskier loan, even though you had qualified for a lower interest rate, fixed, stable loan, because they got a higher commission. We banned that. This bill also imposes a whole set of fiduciary duties where for the first time in law, you're going to have the broker and lender having to take into account the consumer's financial interest above their own. We also banned what's called the negative amortization loan, which is a loan that is so risky that every month the borrower can't pay off the interest fully. So the difference keeps being added to the principal. And as a result, the longer you hold the loan, the bigger the loan gets, and then you have this massive balloon payment. People can't pay it off, and they default, go into foreclosure. And then we also put in a strong set of penalties, such as revocation of licenses, and we cap prepayment penalties, which have locked people into loans that they could not refinance out of. And if we put in these reforms, we can avoid a crisis of this in the future. And just to understand the scale of this crisis, California is ground zero for home foreclosures. We're getting about 70 to 80,000 foreclosure filings every month. If you do the math, that's about one every 30 to 40 seconds. And just how bad does it have to get before we start getting some lending reforms into the system? And we've worked with the governor's office. We took out his main objection to this bill, which he vetoed last year. Hopefully the governor will sign it this year and show that California can lead the way in lending reform and make sure that this doesn't happen to us or to our children again.